Welcome back to the Daily Stack. Today, it's July 31st, 2025. This is not financial advice, unless you ever considered RSI to mean ridiculously strong instinct, and your TA guru is your ex who still hasn't returned that crypto wallet yet.
Stacks piling, my ledger like a skyscraper. Block by block, I'm the blockchain's narrator. Digits in the wallet doing flips, acrobat. Satoshi's ghost whispering. Stack, where you at? Riding these markets like a bull, no leash. Whales in the deep, but my grind's unleashed. Gas fees biting, but I dodge like a fighter. Wallet on fire, crypto igniter. Crypto stack attack, flipping, watch it grow. Numbers on the screen, it's a digital glow. Daily grind, daily shine, that's the podcast flow. Crypto stack attack, let the knowledge overflow.
The markets wobbled hard. Crypto's total market cap dipped 4.8% to about 3.95 trillion, with 92 of the top 100 coins in the red. CryptoRank reports trading volume surged to 146 billion amid the carnage. Bitcoin slipped to about 118,000, volume mixed, but 222 million poured in from the spot ETFs yesterday, signaling that big buyers don't scare at red blocks. Ethereum outperformed slightly, down 1.5% to 3790, but flows still remain strong. iShares ETHA ETF extended its 17-day inflow streak. Institutions keep stacking while retail hits sell in panic. Altcoins took the brunt. Solana, AVAX, BNB all down 2 to 4%. Bitcoin dominance quietly climbed above 60.3%. Smart money starting to bet on Bedrock over Fantasyland. Smart money betting on Bedrock over Fantasyland. Wire money stayed wired in. The White House dropped a 160-page policy dossier pushing the Genius Stablecoin Act and Clarity Act, paving a golden age for U.S. crypto innovation. Though no fresh details on the strategic Bitcoin reserve yet, the SEC and CFTC were named as co-architects for transparent regulation, and the report urges immediate implementation of key reforms. Now let's talk about the latest chess move from the wizard of corporate Bitcoin hoarding himself, Michael Saylor. Strategy, formerly known as MicroStrategy, just launched a new class of preferred stock called STRC. Yes, the fourth in a growing alphabet soup of capital weapons they've deployed to stack more sats. First it was Stride, then it was Strife, then Strike. Now it's Stretch, as in stretch the balance sheet so we can buy even more Bitcoin. So what is it? STRC is a perpetual preferred share, meaning it never matures and can suspend dividends without triggering default. That's Saylor speak for, you might not get paid, but I still get to buy more Bitcoin. And yet, yield-hungry investors are piling in anyways, chasing up to 11.5% in monthly payouts that depend almost entirely on Bitcoin going up. In true classic Saylor fashion, the money raised from STRC, an initial $500 million, is being used not to grow the software business, but to buy more Bitcoin. And that business, by the way, only pulls in about $460 million in revenue a year. So if Bitcoin stops mooning, or even just chills out for too long, those juicy dividends might dry up faster than a Solana node in a dust storm. Critics like legendary short seller Jim Chanos are calling it financial alchemy, pointing out that strategy trades nearly at 2 times its net asset value, with much of that value being just, well, Bitcoin, basically. Investors are paying a premium for Bitcoin exposure that could have bought it directly. But the fans? Oh, they love it. They see Saylor as the highest priest of hard money, the only public CEO turning shareholder equity into one-way rocket to $1 million Bitcoin. Right now, Strategy holds close to 580,000 Bitcoin. That's over $68 billion worth, depending on the day. More than any public company, government, or loose collective of Trezor wallets on Twitter. So what is STRC really? It's a bet on Bitcoin's forever bull case, wrapped up in a yield product, hyped by the king of conviction, and structured to ride volatility like a warhorse. If it works, shareholders get yield, Strategy adds more Bitcoin, and Saylor cements his place as crypto's Michael Jordan, minus the sneakers, plus a yacht full of cold wallets. If it doesn't, you're left holding preferred stock with no dividend and no guarantee. Just the vibes. Maybe a laser-eyed prayer. JP Morgan partnered with Coinbase to let Chase cardholders buy crypto directly, redeeming credit rewards into USDC in 2026. Finally, TradFi's bridging the gap. Also confirmed, spot ETF in-kind creation redemption was approved, reducing spreads and slippage. Institutions just upgraded their toolbox, and BlackRock filed for an ETH staking ETF. Imagine earning yield through TradFi in your crypto portfolio. What the charts don't show, blockchain does. Exchange supplies of BTC and ETH keep draining. Smart money moving coins to cold wallets. ETH staking now exceeds 30% of total supply, and reserves are multi-year lows, a formula for squeeze dynamics. Open interest in ETH futures surged to 7.85 billion, showing heavy institutional positioning post-dip, not backing off. The Fear and Greed Index eased to 68, cooling, but still flirting with greed. Whale activity signals conviction. Dips are not exits, they're buying zones. Yesterday, Memecoins imploded. Bonk, Fart, Pepe dumped 18 to 30%. As panic sold, institutional players scrubbed profits off the top. But DOGE stood tall. On-chain trackers flagged 130 million DOGE, scooped up in the last 24 hours, lifting aggregate whale holdings from 49.3 billion to 50.8 billion. Prices bottomed at 22 cents and then bounced to 23 cents, setting up the classic spin bottom turnaround. If DOGE reclaims 26 cents, targets of 30 cents aren't crazy. Analysts even whisper $1 possibility this cycle. A few hot name spotlights: Punisher Coin, PUN. Streamlined tokenomics and swap incentives led to $185,000 raised in its presale. On-chain metrics show rising whale interest. Expect to see 100x if momentum continues. But that's not financial advice. The No Chill token, NCL, surprise breakout among sub-$1 coins. Plus 89% today thanks to meme-fueled DeFi promises and liquidity staking returns. Watch this one for shock volume moves. DOGE is OG whale level authority. These others, narrative storms looking to steal headlines. Trade smart, exit faster than they dip. And that brings us to the tip of the day. If you're holding a meme bag and your stop loss is still sitting in Discord DM history, reset it. Dips aren't tiers, they're resets. For DOGE or high conviction alt stakes, use scaling strategies, but only roll what you can afford to lose. If you're in Bitcoin or ETH, you're in accumulation mode. Be patient, not panicked. And seriously, don't click links from random DMers. Official hardware wallet link in the description is your fortress. Your private key isn't a meme. Stack smart, stack daily, and I'll see you degens tomorrow. Ether in the veins, I'm a decentralized beast. Mining through the code, I'm feasting on the